My name is Brett Synicky, and I am a solo 401k self-directed IRA consultant here at Sense Financial, and I'm joined with the president and owner and founder of Sense Financial, Dmitriy Fomichenko. And we are going to address the pre-submitted questions first and then get to any that you submit throughout this time during this webinar at the end after those are answered. And we'll just get started here in a moment. But just to introduce the company, Sense Financial is a boutique financial firm that specializes in helping our clients unlock their retirement accounts and self-direct them into alternative assets and take control of them. And we've been in business since 2010 and have established well over 3,000 of these, well over 3,000 clients and well over 4,000 individual accounts. And so we're well established, and we look forward to answering your questions here in a moment.
All right. Thanks, Brett. Let's go ahead and start with the first one, who comes from Rahul, and he's asking, what are some tax planning strategies for having Wyoming LLC that pays me and pays into my solo 401k?
Rahul, thank you for the question. We appreciate it. And while we're not going to be able to comment a whole lot on the specific state LLC and the benefits to running a business in a specific state, an LLC, a single member LLC, absolutely can sponsor a solo 401k. And just as a reminder to everybody, you can be incorporated, you can be sole proprietor, single member LLC, partnership. Any type of business structure can actually sponsor a solo 401k as long as you don't have any full-time employees outside of you and your spouse. And so that's the answer to the, it can absolutely sponsor the solo 401k and pay into it. And just also another reminder, you have two buckets on the benefits from a contribution standpoint for the solo 401k. And the first one is the elective deferral. If you're under 50, that's $23,000. Over 50, that's $30,500, and that can be, you can contribute up to 100% of your self-employment compensation as a pre-tax or a Roth contribution, and then you can go up to the 69 max or 76,000 by adding in the profit sharing, which is roughly 20 to 25% of what you pay yourself or the gross profit of the company, and that's how you get from 23 or 30 up to 69. So just that's how you can have an LLC that sponsors the solo 401k and pay you and pay into the solo 401k. So just a quick example, Rahul and everybody else. Rahul, if you paid yourself $100,000, you could contribute, I'm assuming you're under 50, you could contribute 23,000 of that, and then roughly another 20,000 on top of that for the profit sharing, for a total of about 43,000. And as a reminder to everybody on the call, you may or may not know this, but on our website, under the Solo 401k drop-down menu, we actually have a contributions calculator to give you an idea of what these numbers can look like for you. All right. Carl asks, I would like to hear some explanations of the plan characteristics.
Well, Carl, good question. The plan characteristics codes are the codes that are required to be provided when you complete an Form 5500 easy, and we make it easier for you. We tell you exactly which codes to use. So what you do want to do is you want to log into the client portal. You want to navigate to the maintenance section, go to the filing requirements for the Form 5500 EZ, and in the instructions we tell you exactly which codes to use. Just follow the instructions. We spell that out for you and make it as easy as possible. If there's any specific questions that refer to your particular form, do let us know. Next question is from Keke, and who's asking, close the business with Solo 401k, what to give to investment providers to roll assets to a new Solo 401k?
Kiki, thank you for the question. If you close the business that's sponsoring the Solo 401k, then we need to amend your plan documents with the new sponsor. So assuming you are going to maintain that legitimate self-employment activity required to have a Solo 401k, that new business would now become the sponsor of the existing Solo 401k. The Solo 401k itself is not going to change. Therefore, it's not going to impact any investments that are currently owned by the Solo 401k. So you can reach out to us and we can answer those questions a little more specifically for your situation, but that should cover most of that. Paul asks next, as long as I keep investing my self-directed IRA into trust deeds, I don't think I'll have to pay any taxes, correct?
Paul, you're correct as long as you're investing and keeping the funds inside of an IRA, because investments inside of an IRA or income from those investments is sheltered from taxes. IRA does not pay income as long as it generates income passively from the investments that it makes. When you start making or taking distributions from your IRA, those will be then subject to taxation if it is a traditional IRA. As long as you do it inside of an IRA, then you're fine. There is no tax consequences, but taxes will apply when you start taking distributions from the IRA. All right, next question comes from Nicholas, who's asking, if I have a loan from my Solo 401k that goes bad, how can I pursue the borrower and remain passive?
Yeah, thank you, Nicholas, for the question. Quick reminder, if you're in the call and you have another question that we're not answering so far, please feel free to put it in the chat and we will get to it at the end of these. Nicholas is asking, let's see, a loan from a Solo 401k that goes bad, how can he pursue the borrow and remain passive? Okay, so Nicholas is concerned with doing work on behalf of the retirement account that he's not allowed to do. That's where the question is coming from. Nicholas, good question. Russell Brunson, the founder of ClickFunnels, I heard him say a long time ago, don't worry about a how, don't worry about how, worry about a who. And the who in this situation would be hire an attorney to help you go through the process of trying to collect this. Whether they're going to put certain liens on some assets this individual owns or go through the foreclosure process on the real estate that the loan is for, whatever the case may be, I would worry more about the who than the how and hire an attorney to help you with this. And next question is Ulia. Hope I'm saying your name correctly. Ulia is asking, can you explain Roth IRA conversion in self-directed IRA when investments are not liquid?
Yulia, good question. Yes, if you do have a traditional IRA can be converted to a Roth IRA. Roth conversion is a taxable event. It is a reportable event, and conversion must be reported to the IRS. And then you will get a 1099-R from the custodian reporting the taxable event, the amount of the conversion. Now, to determine the taxable amount, you will have to get the valuation of the investment that you're converting. So in your case, since you're not converting cash, if you wish to convert investment that is not liquid, you will have to get the valuation, third-party valuation on that particular investment. We do have a resource for it. We do have a specializes in providing valuation to the self-directed IRA and 401k clients. They are listed on our website under you can use them or somebody else if you can find them. Again, it's not something that many people do, so but we do have at least one referral for you. Once you do the valuation, then you have to submit the request to the IRA custodian to process that. Now, the challenge In your case, if it is a traditional IRA and you're doing a Roth conversion, do you have other assets in that IRA that are staying as traditional, or just a single asset? If it is a single asset and you convert in that asset and remain in cash, that is relatively easy. You submit the request and then your traditional IRA is converted to Roth. If you, however, have other assets in your IRA and you're doing a conversion and only of one asset, then you will have to create a new self-directed Roth IRA and move that asset from traditional IRA to Roth IRA. So it becomes more complicated. But again, it's possible. You can follow these procedures and you can get that done. Yulia, hopefully that clarifies your question, and feel free to reach out to us and we can talk one-on-one if you need further clarification with this. The next question comes from Teresa, who's asking, if I move money from another bank that is not a retirement account, if I move money from another broker that is not a retirement account, will I have to pay capital gain taxes? Brett, you want to give it a try?
Sure, yes. Thank you for that question, Teresa. Appreciate it. I don't know, because I don't know what other broker or account you're talking about. Chances are, if it's not a retirement account and you sell something, there's going to be some capital gains. But if you're just moving money, maybe not. Again, I don't have enough information. Teresa, if you're on the call, feel free to type into the chat just a little more clarification and we'll answer the question a little bit more effectively maybe. And also, of course, you can reach out directly to us. But I would start by probably calling the wherever that money is, broker, maybe it's a financial planner, I'm not really sure, but wherever that money is, and asking them that question, or the current custodian, if you will, asking them that question and see what they say. Raj is asking, how can LLC that is partnered with self-directed IRA get a recourse mortgage loan?
Thank you, Raj. Let me just read the question again so that I can digest it. How can LLC that is partnered with self-directed IRA get a recourse mortgage loan? It will help to get a little bit more details to get the background on your situation. But if you have an IRA that is partnering with non-IRA to acquire a property, the IRA, the loan to an IRA has to be non-recourse to the IRA account owner. The IRA account owner cannot provide a guarantee. So a couple things to mention on this particular scenario here. If so, number one, the loan must be non-recourse to the IRA account owner and any of the disqualified person, which is immediate family members of the IRA account owner. Second, if the partner wants to get a recourse loan and wants to put his personal guarantee on the loan, that is possible, but it's not an individual here that you're mentioning. It's an LLC. So the question is, who owns the LLC? Who are the members of the LLC? And if the members of the LLC are a disqualified person, then such kind of partnership will not be even possible. Okay. The second is if you have a lender that is just doing a conventional financing, typically they will want to have all of the borrowers to be on the loan. So that might be challenging to get this. But Raj, again, it will help to get a little bit more background to get a better feeling what the situation there. But again, feel free to reach out to us directly. We can clarify your question. But hopefully that gives you some direction. Next question comes from Patty, who's asking, how do we do due diligence on the company handling the transaction?
Dmitry, can you hear me okay?
Yes.
Okay. I called in instead, so hopefully this is a little better. Apologies for the technical difficulties on my end. So, Patty, thank you for the question. Well, I guess it depends on what type of transaction you're talking about. Again, feel free to put into the chat a little more detail and we can address it further. I don't know how to answer the question because I'm not sure what type of transaction you're talking about. And I don't want to guess, but Patty, again, feel free to reach out directly to us. I'm not sure, I don't see your name in the call, so maybe you're not here, but we'll try reaching out to you directly after the call to see if we can answer your question. Jim is asking, is there a property type requirement for solo 401k? For example, consultant, caregiver, wellness coach, etc. He's giving examples of actual self-employment activity.
Jim, as long as you are self-employed or own a business and you don't have any full-time employees working for you, then you'd qualify. There is no certain business requirements to qualify. In other words, any of those examples that you provided will work. Again, as long as you generate self-employment income, reporting that on a Schedule C, or you have an entity that generates earned income, then you'd qualify and can establish a solo 401k. All right, moving on. Next question is from Leo. Hopefully I'm pronouncing the name correctly. Who's asking, what is the process to transfer the funds from an existing SEP IRA account into a solo 401k account?
Well, good question. Thank you, Eliu, for asking that question. Well, you would, first off, the solo 401k would need to be established, right? So let's assume your solo 401k is established. You would reach out to that existing custodian with the SEP IRA and initiate that transfer process, rollover rather, from that custodian into the solo 401k checking account. And the easiest way to do this, to get instructions on how to do this, is to log into our client portal and go into maintenance section, and then you can click on the rollover, it literally says rollover, and then you'll get instructions on how to do this. And of course, you can reach out to your account manager here at Sense Financial for further instruction. But essentially, you're going to initiate that transfer from the existing custodian for the money to be sent to your new solo or your existing solo 401k checking account. Stephen is asking, when does it make sense to convert a traditional 401k to a Roth IRA?
Well, Stephen, it's a question that is asked on a regular basis, and the answer to that, it depends. Unfortunately, without knowing all of the details, I can't really answer that for you. And even if I knew all of the details, I'd be limited to what I can say. Generally speaking, Roth conversion does make sense. The younger you are, the more time you have to grow your money tax-free. It makes sense to do that. Also, you have to factor other considerations such as your current age, the tax bracket that you're in, the investments that you're making, your current tax bracket and the future tax bracket, the potential return on those investments that you're expecting to generate. So something to discuss with your CPA. Certainly you want to bring your CPA into the conversation because you want to understand what the implications are. tax implication of the conversion. But again, there is no simple formula that will work for everyone. Everyone's situation is unique because everyone is income unique and goals are unique and so forth. So, but talk to your CPA and hopefully he'll give you some guidance. This was the last pre-submitted question, and now we're going to move on to the questions that people submitted here in the Q&A. And again, folks, you do have the opportunity to ask even more questions just by typing them in the Q&A. And let's jump to a first one from Raj, who's asking, friend of mine is investing $250,000 from his self-directed IRA into a partnership, but partnership has owner financing, meaning recourse mortgage. Is that a problem? Should he set up a checkbook IRA LLC first? Brett, you want to give it a try?
Sure, yeah. Well, first off, I'll address the second question first. The set up a checkbook IRA LLC. At Sense Financial, all of our plans have checkbook control, so we're going to recommend that you do have checkbook control. It's going to be more cost effective and cause you less time delays. If you don't have checkbook control, of course, you're going through the custodian for everything. You have to submit requests usually on their portal online, and then some time goes by, and then they'll kick back whatever it is you requested, to sign a contract or send a wire, whatever it is. And all assets are going to be owned in the name of the custodian for benefit of your retirement account. So if you have the checkbook control, you can just have a checking account, or acts like a regular checking account that you can do wire transfers from for investments, write checks, and you can invest as quickly and easily as that. And then you have signing power on behalf of manager of that LLC, which is owned by the IRA. So there is no custodian to go through. We bypass the custodian. We cannot eliminate the custodian in an IRA, but we bypass the custodian with that. Okay, so that's thing number one. Thing number two is, it's not a problem. You're going to be a limited partner in this situation, and you're going to invest, and there's going to be a mortgage. One thing that you're probably going to want to do a little research on is the mortgage, the portion of the income that is generated because of the mortgage in an IRA is going to kick off what's called UDFI, unrelated debt finance income, which is going to trigger UBIT, and that UBIT stands for unrelated business income tax. And so just to understand the implications of that, what that looks like before you pull the trigger on an investment, that has nothing to do with whether you have checkbook control or not. It's because it's invested and the IRA owns it, it's going to trigger that UBIT on leveraged real estate. Next question from Scott is, regarding my solo 401k, what does my spouse do if I die? She is not an employee, I'm assuming, of the sponsoring business.
Good question, Scott, and good that you're talking about this. We did send out several reminders over the years that it's important to do this kind of planning. So what you obviously want to do is you want to designate your spouse as the beneficiary to your 401k account. So if something happens to you, if you pass away, then your spouse will inherit your 401k, and she should be able to convert those assets, if it's non-traditional assets, to can be moved to an IRA under her name, and so that takes care of it. Also related to that, you may want to look into creating a family living trust and designating your family living trust as a contingent beneficiary, because if something happens to both of you, you want to address that situation as well. But again, every retirement account holder has the ability to designate beneficiaries to his or her retirement account, and you should do that as well. And a couple other things to mention. You do want to make sure that your loved ones and maybe some other trusted person is aware what assets are in your 401k, so that they're not going to scramble. I've seen that several times when a spouse inherited a 401k and they're at a loss. They don't know exactly what is in there and what to do. So make sure that your spouse and another trusted person is aware of the list of assets that you have in your 401k and keep that updated. All right, moving on to next question from Tom, who's asking, can my Roth IRA buy personal coins?
All right.
Brett, can't hear you.
All right, let's try it again.
Okay, I can hear you now. No, no, I just heard you a moment ago, but not. Sorry about that.
How about now?
Okay, perfect.
Okay. So sorry, guys. Having some serious technical difficulties today. I'm switching from phone call in to computer and trying to figure it out. But it's like we're okay right now. Okay, can I buy Roth IRA? Can my Roth buy personal coins? Well, personal coins are probably going to fall into the collectibles category. And the IRS says that an IRA and a 401k cannot invest in collectibles. And so the answer is going to be no on that. You can certainly buy precious metals. Gold, silver, platinum, palladium are the four that I know of that are approved by the IRS. So you could look into doing that, and you'll need to get with an exchange that can hold the metals. You can't hold it. You can't, have those in your safe at home or under your mattress or whatever. But that would be an option. But the coins are going to be collectibles. So the answer is going to be no. Deepa is asking, what is this year's limit for the 401k IRA?
Assuming you're asking about contribution limits, so if that's the case, the contribution limit for the 401k for this year is $69,000. Plus, if you're over 50, then there is a catch-up of $7,500. So that's the maximum limit for the 401k. You can also contribute to an IRA independently from that, and the limit on the IRA contribution is $7,000 per year, plus $1,000 catch-up if you're over 50. So again, $69,000 401k, $7,000 IRA. Moving on to next question from Dan, who's asking, what is the best way to convert from traditional to Roth without paying income tax?
Man, if we could all figure out how to do that, right? Dan, that's a great question. What Dmitry was alluding to earlier is strategically, of course, you're going to consult with your tax advisor before you do this, but strategically doing a Roth conversion in a year where maybe you don't have high income, right? Because the amount you convert is going to be added to your taxable income for that year. So if you make little money this year, it might be a good year to convert some of that Roth money, some of that traditional to Roth. But outside of that, I don't know if there's a way to avoid paying income tax when doing a Roth conversion.
Yeah, I can just add to that Roth conversion is a taxable event then. So there is nothing you can do about that. You can not pay tax on the Roth conversion. Roth conversion will generate 1099-R, which will be reported to the IRS. You're going to get a copy of that, and you have to declare that as your income. Now, there are some strategies to perhaps minimize the impact, the tax impact. And one of the strategies I'm actually going to be, we'll be doing a webinar on that shortly here in the coming weeks, how to supercharge your Roth IRA. So, and I'm going to give you a little bit of a teaser there, as you can convert an asset. And when you convert a liquid asset, it can be valued lower than the actual value is, perhaps. So you can get that valuation lower and pay the taxes on the lower amount, but you still nonetheless pay taxes. But be on the lookout for the announcement for that webinar. You perhaps want to join and learn that strategy. Next question comes from Scott, who's asking, how do I report solo 401k distributions to the IRS? Is there an IRS form on or the website that I can use?
Well, you are going to report it in as a 1099-R, and if you would like to have us help you with that, we certainly can. You can also complete your own 1099-R, and you'll turn that in to your tax advisor who is doing your taxes, and that will be how you report it to the IRS on your tax return.
Yeah, and in addition to that, Scott, you do want to go to the client portal. You want to go to the knowledge base and look for an article on distribution, because you also will be required to withhold 20% mandatory tax and send that to the IRS. So, and there is a description on how to do that. So be sure to follow those instructions. Next question from David, who's asking, I set up a self-directed IRA that includes an LLC holding rental property. I have a checkbook privileges that I utilize to pay repairs on the property. What is the correct way to begin taking distributions from a self-directed IRA? Complete paperwork with the custodian, IRA provider, write myself a check and keep track of the distributions for tax purposes. Other?
Well, the other is you're going to go through the custodian for all distributions. So you're going to contact them. They're going to have their process of issuing you that money. You cannot personally take the money out of your LLC checking account. It needs to come from the custodian directly to you, and then that will be reported to the IRS as a distribution.
Yeah, I don't have anything to add to that, David. It needs to be done on the custodian level. You cannot distribute from the LLC. That will be a violation, because you don't own the LLC. IRA owns the LLC. So all the distributions must be taken from the LLC to the IRA and then to you from the IRA.
All right, what is the cost? This is from Rahul. What is the cost involved with setting up a solo 401k with Sense Financial? Also, how do you guys compare to neighbors? They are the only other company in the market that I see doing this stuff.
Raul, our fee structure is very straightforward. We charge $600 to establish a solo 401k plan. And Neighbors is a competitor. And what makes us different is the quality of the client services, I believe. I believe we provide superior service. We have a great process and great team in place. And our process is designed to exceed our clients' expectations. So I'm certain we can do that with you, but you are welcome to reach out and speak with someone on our team who can give you more details on how the process works.
And to add to that, I have heard from many of our clients that they were comparing different companies, and they ultimately chose us for the primary reason that they were able to get a hold of us and get their questions answered. And so for our clients, we offer unlimited client support. And so I just want to note that you're not going to just talk to somebody who's taking a message over the phone. You're going to get somebody that knows what they're talking about, and you're going to get answers pretty quickly to to your questions.
Yeah, unfortunately, many companies out there, and I'm not talking about just our competitors, I'm talking about in general terms, many companies, they're focused on gaining new business. Our focus is actually on retaining business. We go out of our way to provide with our clients with the superior service and support them, not just during the process of establishing the plan, but maintaining our desire to establish a lifetime relationship with our clients and come alongside them to help them grow their wealth and achieve financial independence and help them accomplish their goals. All right, moving on to the next question from Kyle. What forms of retirement savings can I pursue so that withdrawals in retirement are tax exempt?
Well, what forms of retirement savings? The Roth is the simple answer to that. Put as much money into the Roth as early in your life as you can. And there's a few benefits to that. Yes, you're paying taxes on the contributions, but you're paying taxes on whatever your tax bracket is now. So presumably when you're younger, you're in a lower tax bracket if you start early. Even if you're not, taxes down the road are probably not going down, they're probably going up. And so if you are putting that money in early and letting it, investing it over a long period of time, all the income gains, all the gains are tax-free at retirement. Now, make sure that when you do these, you're actually at retirement age of 59 and a half. There's no RMDs, required minimum distributions on Roths either, which is another benefit of the Roth. And then another one I'll just mention is in the Roth, the money that you put in, since you already paid taxes on it, you can actually withdraw the principal at any time without penalty or taxes incurred. And so that can be, I guess, a form of an emergency savings fund, if you will, that you just don't have in a pre-tax environment traditional. Outside of that, I don't know. Dmitry, anything to add on that question?
Well, as far as the retirement accounts, then yes, it's Roth IRA, Roth 401k. In addition to that, you can invest personally in real estate. Real estate provides you with the tax benefits. So personally, I'm doing that with my personal savings. I invest in commercial real estate, and that helped me tremendously reduce my tax liability now, not just in the future. But you do need a good tax strategist, not just a CPA who files your taxes, but you do need a good tax strategist to help you plan for that. All right. Moving on to the next question. Brett, go ahead and read that for us.
Sure. David, thank you for another question, is asking, what is the correct way to move funds from a self-directed IRA to a brokerage account to purchase stocks, funds, write a check via my checkbook writing privileges?
So David, if you, I believe you have a checkbook IRA, so it's a IRA LLC, and you have investments there that produce income, and you perhaps accumulated some cash, and you want to put that to work into brokerage account. You will need to open a brokerage account in the name of the LLC, and then transfer that. Unfortunately, lately we've been noticing that most brokerages, they refuse to open a brokerage account for LLC that is owned by the IRA. There is one that we know that works. I believe it Tasty Trades. Brett, if you can confirm that.
Tasty Trade, yeah.
Yeah, so that's the one that we know. Fidelity and Schwab and Vanguard, I believe, they no longer process brokerage accounts for LLCs that are owned by the IRA. All right, moving on to next question from Enrique. And he's asking, I'm buying a rental property with my solo 401k. My plan is to create an LLC owned by the solo K and have property title to the LLC. Once the property begins cash flow, should I move that cash flow to my solo 401k account, or can I keep it in an LLC account?
Well, Enrique, thank you for the question. So think about it like this: the checking account for the solo 401k is the home for the liquid cash until it's deployed into whatever investment you choose. And so with that, all of the proceeds, the rent payments, all the income from interest payments, whatever it is you're investing in, go into that checking account owned by the solo 401k trust. Now, when you take that money out, first of all, I'm not talking about a distribution, I'm talking about investing. And so you'll invest that back into it. So I would not keep it in an LLC account of any sort. I would just put it back into that solo 401k checking account owned by the solo 401k trust.
To add to that, Enrique, if your intention is for the LLC to own the property, number one, you don't have to have LLC to own the property in a 401k. Your 401k can own the property directly. Occasionally, clients let us know that they do want to use LLC maybe for liability protection, and that's possible. You can set up an LLC that your 401k owns. Couple things in mind that to keep in mind. The LLC needs to be created in a certain way to be IRS compliant. So it's not your regular LLC because you don't own it, 401k owns it. So it's possible to set that up, but it needs to be set up in a certain way to be IRS compliant. If you want to go that route, then you do need to establish that before acquiring the property, because you have to have the LLC in place, funded and ready to execute that transaction and take the title to the property. Then if the LLC owns the property, then all the rent belongs to the LLC. So it goes into the LLC checking account. And from there, you can distribute it back to the 401k if you wanted to, or reinvest using the LLC. So that's going to be up to you. Feel free to reach out and we can chat more.
Curtis is asking, I borrowed from my 401k and I'm struggling to repay it back. What might be the steps to take before I default and I'm subject to taxes? I'm 64, so I don't think I'm looking at a prepayment penalty, but I do anticipate taxes will be due. My solo 401k is not funded and has not been. What steps might I take to mitigate the impact of the 401k that I borrowed from?
If you fail to repay the 401k loan, it becomes taxable event. So you need to keep that in mind. But I'm not sure I can think of any suggestions here. The loan needs to be repaid, and if it's not, again, it becomes a taxable event. Curtis, maybe you can reach out to me directly and we can chat. I think it needs more deeper conversation than just a question here during the session. We can try that. Next question: what banks do Sense Financial recommend?
Well, we recommend for the IRA, the custodian is going to be Solera National Bank in Colorado, and as part of that package, you're going to have a checking account there as well, the LLC checking account. For the solo 401k, we recommend a few banks. Solera National Bank is one of them. Fortis Bank, both of those are in Colorado, and then the third one would be Titan National Bank in Texas. And just a note on when you're choosing which bank, it's important that if you are a client of Sense Financial, that you use one of the banks that we recommend for the solo 401k, because we're not affiliated with them. They're third party to us, but we have a relationship with them. So We understand how they work, they understand how we work, and we have a partnership from that perspective. Plus, we have access to their back end. So if something were to, if you have a customer service issue, we can help change the outcome of that because we have access to their management and the people that work there. If you were to go rogue, I'll call it, and go use some other bank that we have no relationship with, then we're not going to be able to guarantee the outcome of your checking account being opened properly and the customer service experience that you're going to have. So just wanted to make that note on that. And then David is asking, if I use a self-directed IRA to purchase real estate, do I need to file a tax return if I do not take distributions? Is there a way to take advantage of real estate depreciation expense in a self-directed IRA? Good question, David.
David, you file a personal tax return regardless of what happens in your IRA. The IRA does not file a tax return because it's a tax-deferred retirement account, and real estate that you own, that your IRA owns, you don't own that real estate, so there is no effect to you personally. You can't claim depreciation from. It's like, look, David, if I, Dmitry, own a property, you can claim depreciation on the property that I own. So your IRA is different from your separate legal entity. So you don't own that real estate. You cannot claim the tax benefits from that real estate. Next question. When paying non-recourse loan payments in a self-directed IRA, may I use a checkbook writing privilege to make a payment, or do I need to complete paperwork with the custodian and have them make payments on my behalf?
Yeah, David, another good question. You have checkbook control over that LLC, so you're not going to go through the custodian for anything like that. You're gonna just either do an online bill pay in the bank, on the app, or online to pay that, just like you would your personal mortgage. You can also send in a check, a hard copy manual check, old school style. You can do that too. That's up to you, but it's going to come from the LLC checking account. The custodian is there. We bypass them with the checkbook control, but you do have to go through them for any transfers from one qualified retirement account into the self-directed IRA. You go through the custodian for that, both custodians in that situation. Any distributions are done through the custodian. The annual valuation, 5498, is done through the custodian. And outside of those, you have checkbook control to distribute the funds in investments how you see fit, and also make payments and sign documents, et cetera, on behalf of the IRA. All right. Dan says, what's the requirement to open a solo 401k?
Good question, Dan. To qualify for a solo 401k, you must be self-employed or own a business that generates earned income, and you cannot have employees working for you. As long as you meet those two requirements, you are eligible to open a solo 401k, and you can take advantage of all the great benefits that it offers. If you want to learn more about that, navigate to our website, click on the solo 401k, and also I recommend that you watch a video recording of the webinar on the topic, where you can learn more about all the ins and outs of the solo 401k. All right, next question from Raj. Is there a way for self-directed IRA to be a partnership with LLC such that operating agreement states that SD IRA will not be party to any recourse loan? They become a note holder in the event of a recourse loan. In other words, when a loan is needed, SD IRA will transfer equity interest to the active partner operator, so recourse loan will be possible, but still allow SD IRA to claim partnership at the time of disposition.
I'm going to let you take that one, Dmitry. I think I'd probably need to get on the phone with Raj to understand a little more about what he's trying to do.
Yeah, Raj, I believe you did ask a question earlier, so I can't really add much more to that. If you are buying a property and there is another partner, you cannot guarantee the loan. So you can put something on the agreement if you'd like, but the bottom line is that you and your immediate family members cannot guarantee a loan to that property. So if other partner is willing to put their name as a guarantor for that loan, that's fine. Again, you can put that in writing on your partnership agreement. That's not a problem, but you personally cannot guarantee a loan. That's it. So it's that simple. Next question from Glenn. Can a single shareholder S Corp which sponsors Solo 401k be converted to a single member LLC and sponsor the Solo 401k?
Yes, you can have any kind of arrangement, business setup. You can have a sole proprietor, single member LLC, partnership, S Corp can sponsor a Solo 401k. So that is absolutely possible, yes. And if you want more on that, Glenn, feel free to reach out to our office. We have some great educational videos on this exact topic, but we're also happy to just jump on a call with you as well. Glenn is asking another question. Does the appraiser of alternative assets in the Solo 401k need to be certified by the IRS? Does the IRS provide a list of these appraisers?
IRS does not provide a list of appraisals. I'm not sure if they have to be certified in a certain way. There is again, we do have one company that specializes in this. I think they have some kind of certification. I'm not sure I can answer that question for you, but feel free to check in with me directly, Glenn. Next question. Tom is clarifying. To clarify, can my Roth IRA buy my personal gold coins? Absolutely not, Tom. You are a disqualified person to your IRA. Any transaction between an IRA and yourself is prohibited. Absolutely not. Next question from Deepa. If I can say, I guess Deepa is trying
giving us a compliment.
Rahul's question. Deepa is a client, and she just wrote here that, again, giving us some compliment. All right. Next question from Rahul, actually. Are the capital gains on the Roth 401ks and Roth IRAs taxed when you finally start withdrawing money?
Are the capital gains taxed when you finally start withdrawing money? No, as long as you're doing it, after retirement, there's no taxes or penalties or anything. So after that 59.5, then you're fine. So go to town on that. The answer is no.
Yeah, there's no capital gains in the retirement accounts. Retirement accounts are sheltered from taxes. And so it's growing tax deferred. In case of a Roth IRA, it's tax-free, and distributions are tax-free. So if you're taking qualified distributions from a Roth IRA, there is no such thing as a capital gain tax. So Brett is absolutely correct.
Can I designate, from James, can I designate the employer match on my Solo 401k as a Roth contribution?
James, there is no such thing as a employer match with the Solo 401k. There is a profit sharing. And actually, recent changes in the law do allow you to do that. It's a little bit cumbersome to process that. So I will say the easier way to do this will be to have the employer make the profit sharing contribution, and then you, as the plan participant, you can do RAT conversion. So the end result is the same, but it's going to be simpler to administer that. Next question from Glenn: does Sense Financial offer tax strategy service? And the answer is no. We are not tax experts. We do not offer any kind of tax advice. Moving on to Rahul. Could you repeat the name of the company that does trading accounts for the Solo 401k?
Tasty Trade.
All right. And then a question from Sharon. I will be doing some accounting for someone that will be paying me, and I will be giving me a 1099 at the end of the year. Can I use my social, or do I need to have an EIN number? Also, does this qualify for a Solo 401k 1099 income?
Sorry, I'm processing the question. Can I use my social, or do I need to have an EIN number? Does this qualify this? Well, you will have an EIN number for your business to sponsor a Solo 401k. If you don't have one as part of our establishment process, you're going to go on the website and create one, and that just takes a few minutes. But as far as how you get money from the 1099 income that you're getting, that's outside the establishment of the Solo 401k. Anything to add on that, Dmitry?
Sharon is a client, I believe, and already has a Solo 401k. So if you're generating more than 99 income, you certainly, that's fine. That income can be paid to your Social Security number. That's just, again, will be reported on the Schedule C. And yes, that is self-employment activity. You are self-employed and receiving compensation, and certainly qualify for a Solo 401k.
I want to go back real quick, if that's okay for Rahul, on his Solo 401 owned by LLC. I think what Rahul meant to say was an IRA LLC, because again, most of the time there is no LLC in the situation of a Solo 401k. And so it's the LLC owned by the IRA that is the problem for these brokerage accounts like Fidelity, Vanguard, Schwab, et cetera, where they're not opening these brokerage accounts in the name of those types of LLCs. So with the Solo 401k, it hasn't been a problem to open a brokerage account in the name of the Solo 401k trust at any one of those establishments. But just remember why you're self-directing. You're typically self-directing to get out of the stock market, or at least diversify from the stock market only. So if you have enough money, I would encourage everybody on the call to consider, this isn't to talk down about the stock market by any stretch, but just consider the alternative assets and real estate and private lending. And for $20,000 or $30,000, you can do private lending. You don't need to default back to the stock market. So just something to consider. This is not investment advice, just kind of what I would do in your shoes. So I just wanted to make that further comment on that.
All right. Another question from Rahul. What trade company do you guys work with if you want to have my subject Roth IRA on cryptocurrency? Can Solo Roth 401k own cryptocurrency?
Sure, it can, yes, but you're going to have to go through an exchange. Most likely, you'll end up going through Gemini. I have heard that they're the most cooperative when it comes to this, opening their account, their trading account, their brokerage account or exchange account is the better way to say it, to own crypto. But bear in mind, this is not a quick process. So if you do want to own crypto inside your IRA or your Solo 401k, it's probably going to be at least a 3 to 4 week process of getting that exchange account established with a company with an exchange like Gemini. And by the way, we do have some instructions on our client portal of how to do this. So you can log in there and search keyword crypto and you'll find it. All right, Fred, good to see you. If I purchase real estate valued at $2 million on a land contract and put $500,000 down, then what do I report as the value of the property? Do I say the value is 500 since that is my investment, or do I say the value is 2 million, which is the purchase price?
Well, if you're buying a property valued $2 million, then you own, I'm assuming, Fred, you're referring to doing that inside of your 401k, not you. When you say I, you probably mean your 401k. So if 401k buys the property for $2 million, you can put down $500,000, but the value of the property is $2 million. So if, again, it will help to get a little bit more context there. Are you talking about reporting on a Form 5500 EZ? Because that's when you need to provide the valuation for total plan assets. Then yeah, you definitely will want to use the $2 million, because that will be the value of the property, or one of the investments that you own in your 401k. But Fred, again, feel free to reach out directly to us.
It's his Roth IRA, he said a couple statements down. So same idea though with the 5498. Fred, when you turn that valuation into the custodian, you're going to value it at that $2 million in your example.
All right, and then we have last question from David. Is it possible to do like-kind exchange with rents collected in a self-directed IRA to another qualified account with a brokerage firm? Example, Fidelity. I'm not sure what you mean, David, here. Like-kind exchange, it doesn't apply with the self-directed IRA, so there's no like-kind exchange. I'm not sure exactly what you mean here, but rents are rents, and you collect the rents, and then the cash that you now have, you can reinvest using a brokerage account. All right. Well, thank you, guys. This was the last question, and we are past the hour. Thank you to all who participated. Great questions. I certainly enjoyed answering them. And Brad, thanks for joining me, and we'll see you guys next time.
Thank you, everybody.